Welcome back to the channel, guys. In this video I'm going to show you exactly how I turned £100 into £1,900 in under 3 weeks and how you guys can do exactly the same thing. I'm going to show you step by step the method I used to grow this small account and how you can grow your own small accounts in the future. A lot of people think you can only make money and see profits in trading by trading large amounts of capital, and I'm here to tell you that that's not true, right? You can start with small accounts, £100, £200 accounts, and grow from there. You don't need platform capital to see success. You don't need large amounts of personal capital to see success. All you need is to master the skill set, and then from there build on that, and you will see the profits and the results come in. And just to give you guys a bit of background information about myself, my name is Zane. I've been a day trader for over 5 years, and I actually started off my trading journey trading these small accounts. So I started off with £100, £200 accounts, and I was growing them from there. I then moved on to prop firm capital and becoming a funded day trader. I'm now a 6-figure funded day trader, and although I trade prop firm capital myself, I always recommend to my viewers and my subscribers that you should always grow your personal account alongside your prop firm capital. And also in the description I'll leave the links to the prop firms that I've used in the past and that I trust, and also the personal brokers down below, so make sure you go ahead and check them out. And literally as I'm recording this video right now, this week I've grown another small account from £85 to over £500 in just 3 days. So when it comes to gold specifically, I like trading London and New York session. Now, I have taught strategies in Asia session. I did actually take a trade in Asia session today, but I will break that down in another video because this was for the other account flip that I grew from £85 to over £500 in just 3 days. So I did take this trade in Asia session. I do trade Asia. However, on gold, after trading it for years, literally the best setups happen in London and New York session. So ideally you want to stick to these times. Now, when it comes to my strategy, the simplest way to put it is displacement, retracement, and entry. Now, I'm going to show you on the chart so you understand this a bit more. So I like to trade when there is a clear direction in the market, and this can be on any time frame, ideally below the 1 hour. So let's say price is making a high, making a low, and then pushed up to make a higher high. The first step is displacement. Do we see displacement above this high? So we have structure on the left right here, we have a higher low, and then we see a push to the upside. The question that we need to answer is, was there displacement present? What do I mean by displacement? Well, simply a willingness to push to the upside, multiple candle closures above this previous structure point. Once we see a push above this structure point, that's the first sort of requirement for the trade idea. Once we see that displacement, all we're looking for is a retrace into our discount areas, and I'm going to show you this in more detail on the actual trades that I took. However, when it comes to discount arrays and discount areas, all this is a simple retrace. So we see an impulse, we see a retrace, and within this area we want to look for an entry. Now, for those of you that are familiar with the channel, and also guys, I appreciate every single one of my subscribers. All your comments mean a lot, all the likes that you guys leave mean a lot. I can see who's liked and who's commented and things like that. So guys, keep it up and just let me know in the comment section down below what you guys want to see. So in this area, what we're going to look for is a simple entry method that we teach in the Discord, and I'm going to show you this on the trade example as well that I took. I'm going to share it all with you guys, but imagine how much more you could learn with that many hours of content that we've put in to the course, to the live stream recordings. You guys will be able to see for yourselves the exact setups that I use on a daily basis. So make sure you go ahead and check that out in the description below. And in regards to the time frames, it can be any time frame below 1 hour time frame. So I like trading on the 15-minute and 5-minute mainly. However, I do also scalp on the 1 minute when a trade setup is present. And when price is trending quite nicely, I will use the 30-minute and even the 1 hour to catch trades. Let me show you an example of a trade idea that I took. So we're going to look at this day right here, Tuesday, the 1st of April. And I took a sell into a buy, and I'm going to break this down. Let's start off by looking at the hour time frame. As you can see, price was very bullish in this overall move to the upside. So as you can see from here, we saw price pushing to the upside quite aggressively. Looking at your overall swing points, you can see we have a high point right here and we have a higher low compared to the last low. Just so you guys know, I do have an education program with myself and Sniper Ads, another trading mentor who's had multiple prop firm leaderboard appearances. He's an amazing trader, over 100k from one prop firm alone, over 350k in prop firm payouts, all verified. You guys can go ahead and join the Discord down below and get full access to the course. You guys can go ahead and read some of the reviews yourself. And there's over 30 hours of content of myself and Sniper Ads showing you our exact strategies, because we use multiple strategies in the market. We have multiple different approaches, and we also show you live trading executions and trade management live. So we have live room recordings all uploaded into the WAP, into the course section, and you also get access to the Discord chat room, and all the members in the Discord are absolutely loving it. So make sure you go ahead and join. There's a lot of value in there. And recently we've been very consistent in the signals room, sending out live trades and our exact trade ideas on multiple pairs like gold, GBP, JPY, and also futures pairs. You guys can scroll up and learn from these live trades, and more live trades will be sent out this week. So make sure you go ahead and join. It's only $30 a month to join the signals room and get access to our exact trade ideas, and also the analysis and the weekly market breakdown videos. Price pushed up to create this high and make a higher high than the previous high on the left. This is the basics or foundations of market structure that is really important. So what I like to do is I'd like to mark out my swing points like this, and then I can see the break of structure point that has occurred, right? I can see the break of structure that's occurred. I can also see the retrace down into this area right here. However, just before this candle had formed, I saw a bit of consolidation, a bit of ranging in this area right here. So I dropped down to the 15-minute time frame, and I saw this order block was holding. Okay, so I saw this order block was holding. However, this wasn't the strongest order block. Question: why is this not a strong order block? And I've spoken about this before in previous videos. Make sure you go ahead and check out my channel for more specific concept videos. And you guys will notice this yourselves once you start getting into ICT concepts more. You will look at specific order blocks and not trade off every single one. You'll only want to trade off specific order blocks and specific candles. And remember, we're still offering challenge passes for completely free, so you don't pay us a penny until after you get a payout yourself. Loads of clients have been getting funded and receiving payouts. So as you can see, this client right here, Joel, got funded with us and then received a 5k payout. So make sure you go ahead, check out the link below to join this group. You will also get access to the signals room for completely free, lifetime access for extra guidance once you're on the funded stage. Our clients have been getting funded, they've been getting payouts themselves, so make sure you go ahead. There's no upfront cost at all. Click the link in the description to join us. And to redeem your free challenge pass, make sure you use code ICT at the checkout. So for example, this candle right here did not actually cause this break of structure right here. This was not enough displacement for me, and we didn't actually see this high get taken out before that order block was created. So therefore, I was not going in for a sell off this area right here. I was not looking for this trade setup. Why? Because there's liquidity resting above this area right here, and I know if I was to sell in this area right here, my stop loss would have to be below this high or in this area right here, and I'm expecting price to actually take out this area right here before pushing to the downside. So instead, what I waited for was a simple sweep of this high, right, sort of a double top scenario, and also a tap into this massive fair value gap that we have here. So for those of you that don't know what a fair value gap is, it's made of 3 candles, candle 1, candle 2, and candle 3. And all we're going to do is mark out the gap between the wicks. I made a full video on fair value gaps before, so go ahead and watch that. Also, I was waiting for those highs to get taken out to the upside, so all these buy stops to be taken out. And what happened was price tapped into that area. A lot of people ask me what are my confirmations. Sometimes when I'm confident in the trade setup, I'll just enter in that area as soon as price hits it. Why? Because this may be a more aggressive setup. However, I know my setups. I've seen this play out multiple times before in my journals, in my past trades. So therefore, I know when this happens, when we see a sweep of liquidity and we're already seeing a push to the downside as impulsive as this, I know that price is going to have a reaction off this area right here. So therefore, I'm more confident taking an aggressive setup in this area. And then simply I got out for around a 1-to-1, just over a 1-to-1 right there, which was around 50 pips. And all I was waiting for now was, I saw a push to the upside. All I was waiting for now was a sweep of these lows ideally before looking for a potential buy opportunity. Simply after these lows got taken out and within this area right here, I was looking for buy setups. My stop loss was safely below this area. Why was it below this area? Because although I use ICT concepts, smart money concepts, I still look at support and resistance. And this is what I teach pretty advanced, pretty in depth in the course. I don't have enough time to go over it right now. I want to keep it short and simple. I don't want to confuse you guys, especially if you're beginners. But simply key levels, support and resistance points are areas where price had trouble breaking, price broke it, and as you can see, it retested it, and we did have a solid reaction off this area right here. So I know if price was to come down into this area, I won't be stopped out because my stop loss, or hopefully I won't be stopped out because my stop loss is below this area, and I'm giving price enough room to have a reaction off this range before continuing higher. Then let's see how this trade played out right here. Okay, literally did exactly that. So it took out the lows from this low as well. And notice, just before price actually went lower into that support zone right there, into that key level. Price made relatively equal lows, right? We call this a relative equal low because sell stops are resting below this low from the buy orders that were here, and the stop losses were below this low. Okay, we saw a buildup of liquidity, price swept it to the downside, and then we saw a push up. Another confluence I had for this was the order block. So simply just this area right here. And you can see how price pretty much taps into that perfectly. A lot of you are wondering, isn't this the whole order block? And yes, you're correct. However, refining it using narrative and context in line with this. And within this area, I scaled in again. So I took some buys here, also took some buys here. So that's pretty much how I go about scaling my entries. I enter within the region that my point of interest is, and I go from there. I let the trade play out after that. And as you can see, price pushed to the upside right there, hit my take profit. And price action was a bit messy. As you can see, we did have a bit of an order block right here after this push down. So that's why I pretty much got out of the trade. We also saw an old high right here with this candle, right, which was a liquidity point right there, which was where my main exit was, which is where I offloaded most of my positions. And that was one of the bigger trades that I took. I put a bit more risk onto this trade setup simply because I've seen this setup before. According to displacement retracement entry, that trade setup wasn't actually present for this buy. However, for the first sell, we did see displacement to the downside, a retracement taking out these highs, and then I saw a simple entry right there. And again, following ICT's power of 3, which is another strategy that I teach, you can see this accumulation of orders right here, pretty much from these lows right here. We saw an accumulation of orders, we saw manipulation to the downside, and this is where we sort of scaled into the trade setup overall, and then we saw distribution to the upside, taking out this high. So that's 2 of the trades broken down right there in one day. So there was actually 2 trades in one day. Usually I try only trading 1 trade a day, 1 good setup. However, if another setup comes around, I will take it if it ticks all the boxes, obviously. Okay, and now here's a few more key points for those of you that are trading your own personal accounts. I'm going to go into a bit more detail on the risk management side of things. So here is the account metrics for the account from MetaTrader, so you guys can go ahead and check all these details out. And here's a few screenshots as well. So here's the profit tab, here's what the balance was on, and here's just a screenshot of a trade, which is a pretty textbook setup of mine, which is why I took a screenshot of it. And I'm also going to show you why my stop loss was in profit and how I sort of manage trades on setups that I'm confident on. So yeah, let's get straight into it. When it comes to risk management, when the account was between £100 or £300 account balance, I was pretty much risking 50% risk per trade. The reason the risk was so high is because you're trying to go for an aggressive flip. It's a low amount of capital anyways. But as the account grew to like £300, £700, I was risking less. I was risking around 40% a trade. And then when the account balance was between £700 to the £2,000 figure, I was risking around 25-30% a trade. Now, the risk does vary depending on the setup, which is why I'm going to get into the trade setups and why it's so important to actually grade your setup. So simply, when it's an A setup, I'm going to use higher risk. When it's a B setup, I'm going to use lower risk. With both of these trading setups, I'm going to be using high risk on both of these, right? So even though it's a B setup, it still has confluence behind it. So I'm still going to be putting a high amount of risk on the trade. You might be thinking, okay, lower risk 30% compared to 50%. 30% still a lot of risk on one trade idea. And yes, it is, but that's the whole point of these account flips. And you can do these at your own pace as well. Don't think there's a time limit when you are trading your own accounts. You can trade at your own pace, right? You can risk small amounts. However, when it comes to trading these personal accounts, you don't want to be wasting too much time messing around with small amounts of money. If you are starting off with low capital, you should be risking more if you want to see those results quicker. When the account doubles or triples, you can pull your seed money out, which is what I did as well, and then carried on from there and then traded with the profits that I had already made. When it comes to the non-negotiables for my trading setups, these are the 3 main points. I need to see displacement or a fair value gap created, a fair value gap or imbalance created. Now, I spoke about this at the start, but quite simply, I like trading in trending markets. So I'm going to show you the trade that I actually took right here. Price took out this high and there was displacement present. As you can see, we were pushing to the upside with this trade idea. We had already made a higher low, so therefore displacement was present in this area right here. And you're probably wondering, okay, well, price had a massive drop. But as you can see, we took out the liquidity from this low, and this to me was a lack of displacement, showing that price has rejected this area right here. We've maintained this higher low, and then we've seen displacement to the upside. Quite simply, all I waited for was displacement, retracement, and then I looked for my entry. Again, we saw a fair value gap in this area right here, which is what my entry was based off. And don't forget, a lot of my entries are accurate. However, not all of them are going to be perfect or exactly at my points of interest. Sometimes I will layer my entries, and that really does help when you are trading with your smaller accounts. Layering entries. So that means, let's say you have a point of interest, right? And price is just above it, you can enter a smaller lot size here. Then once price taps into your actual point of interest, you can put heavy risk on and then take that trade higher and actually use that original risk that you planned on using. The POI needs to include an order block or another discount array. Now I will be making a separate video on discount arrays and other sort of points of interest that you guys can use and that are my favorite points of interest, but for the main part, fair value gaps, order blocks, stick to them. Anything in discount really is valid. And the last non-negotiable is that we have to be trading towards the draw on liquidity. Sometimes you might not have your overall daily bias. Sometimes you might not know where the market's going to go for the next 4 to 6 hours, right? You might not know the bias for the day. But the main point is, if you're trading on the 15-minute time frame or the 5-minute time frame or even the 1-minute time frame, you don't need to know how the day is going to close, as long as you know your short-term targets or your next draw on liquidity. And that's what I'm going to get into in a second, the actual psychology, right? As long as you know your first sort of take profit area, your first target area, you're good. Because on the 15-minute, for example, I was not holding this trade to all-time highs. I was targeting these highs right here, but I think what happened to this trade was price stopped me out right after I took majority of my profits and my trading stop loss was hit. The reason being is, well, we have a massive imbalance to the left right here, and we also have an old high, right? So once this old high got taken out, as you can see, I exited most of my positions and I left 1 out of the 3 positions that I had running, right? And my stop loss was trailing anyways. So make sure when you are in a trade, you're in good profit, manage your risk. Don't be too greedy with your profits. And another key point is to know your bread and butter setups versus your lower confidence setups. And this links to putting heavy risk on A setups and lower risk on B setups. For me, I know what my bread and butter setups are. We have a few bread and butter setups that we share in the Discord, and I've shared these with you on the YouTube as well. It's just in the Discord, we do trade it daily with the team. And as you can see from the results that our students have been getting, they've been on leaderboards already, getting payouts, and it is paying off. So make sure you go ahead and check the Discord in the description below if you do want to learn more and if you're serious about leveling up in your trading journey. But when it comes to knowing your bread and butter setups, you can afford to put high risk on those trades because you've backtested it and you've journaled and you've seen that setup before multiple times. And then when it comes to taking lower confidence setups, of course, risk less on those trades. Now, when it comes to psychology, I never used to be a big advocate for psychology, but when it comes to success and seeing consistency in your trading career, you find out that it's really all about yourself, how you manage your emotions, and how you react to what the market shows you, because the market isn't going to show you the exact same pattern day in, day out, right? It's going to show you similar setups and similar strategies, which is why certain people find success with ICT strategies and certain people don't. For example, myself, I started off trading really mechanical strategies, and then I switched it up, added retail concepts in, and then sort of mixed the two smart money ICT strategies with retail, and that's where I sort of started finding consistency. Now, first point is secure profits. As I said before, don't be greedy. Target the low hanging fruit. You don't want to be targeting sky high numbers. You don't want to be aiming for £1 million trades in one trade idea. Just take multiple profits, be consistent. Start seeing blues. If you start seeing blues consistently, you'll notice your psychology change as well. You'll see your win rate increase and improve. And if you just go back and look at your own trades recently, just look at how many of those trades were winners and they turned into losers because you held on for too long, or because you were targeting levels that were too far away. So look at low hanging fruit. You want to target your first sort of take profit areas. A problem people might have with this is you're not seeing enough profit, and that simply means that you need to look at your trading system and either risk more on your original trade idea, so therefore if you do take profit at the low hanging fruit, you are happy with those profits, because if you do this, then you will start taking profits at those low hanging fruit areas, as ICT says, or those first sort of take profit areas, and you will be satisfied with those profits. If not, then you need to go back test, journal, and look at what take profits you're sort of getting on average. How many pips are you actually catching with your winning trades compared to when you're holding on for too long? Second, allow the trade to play out, either it hits stop loss or take profit. Now, this is kind of subjective. It depends on the trading setup. However, most of the time, once you've done your analysis, once you're waiting for your trade to play out, most of the time you will see, well, for me myself, I did see a lot of my trades hang around in drawdown, but overall go in my direction. So for example, let's say you're taking a buy setup, right? And prices hit a breaker block right here, right? Let's say you enter a trade right here and your stop loss is below this area right here, right? You've entered the trade, but now price is just hanging around in drawdown. What this might be doing is just building up liquidity to sweep to the downside and then see a push to the upside, right? Let's say this is a massive breaker block region right here, but there's a fair value gap that price wants to tap into, as price wants to fill in. But my point being is, a lot of people enter, they'll be in drawdown for a while, and then they'll close out the trade before it gives them a chance to take profit and to actually play out. So that's why I usually hold my trades in drawdown. Sometimes I will scale in even when I'm in drawdown, depending on the setup. I do prefer scaling in though, as price is pushing in my direction, and especially with smaller accounts, you don't want to be risking too much and over leveraging. So make sure you know what you're risking on each trade. Only close at break even if you have to. Pretty much links to this point right here. The reason I'm saying this is because sometimes it's in drawdown, it's hanging around your break even, you'll get impatient, you'll just close the trade. And especially with gold, guys, it likes to do this, right? With your entries, it'll tempt you to close that break even, close that slight loss. However, you need to understand that, okay, you've done that analysis for a reason, you've seen this play out before, price should continue pushing to the upside in this scenario for these buys. And the next point, focus on percentage gains, not profit. Now, it's tempting to just forget about percentage gains and aim for a specific number when it comes to flipping these small accounts, and you will blow accounts if you solely focus on profits. Because think about this, right? The profit gain on this account was something crazy like 3,000%, right? As you can see right here, 3,500 gain overall. I'll obviously be risking less on larger accounts. And that's why it's important, especially when it comes to prop firm capital as well, focus on percentage gains, not profit. Don't be emotionally attached to the account. And this is something else that I always recommend to my students. When you're trading these small accounts, once you double or triple your account, pull out your seed money, your original investment. So at least you know you're playing with your profits instead of your own original capital. And then trade from there, see how you do, and don't over risk on your trading setups. With personal accounts, like I said before, it will be tempting to just put full risk on a lot of the trades, to just go full margin. But remember, be patient, grade your setups, and even if you're risking small on small accounts, that's completely fine, because that will build consistency. You'll have a lot of learning room in there. You'll be able to learn from your trades that you took on that small account. And again, that is the best practice for prop firm accounts. If you're a beginner and you're starting off with your personal accounts, don't go risking crazy amounts. Start off with small risk, then start increasing the risk from there. And if your main aim is to start trading prop firm capital, then that will hugely benefit you, because you're already getting the experience of being disciplined on your own live capital. So then when you're on the prop firm stage and you are on the funded stage, you will be more consistent. You've done this before, and it's really good practice in general if you are beginners to start trading on a demo account and then on a personal, and then moving to prop firm capital. So that's my advice. Make sure you guys stay subscribed. Make sure you follow my socials, like my Instagram and Twitter, for more updates I am posting on there. And make sure you go ahead and join my free Telegram as well. There's a lot of source on there as well. I'll be sharing a few weekly breakdown videos on there for completely free, so make sure you go ahead and join that. If you want access to the Signal Zoom with our exact trades, go ahead, click the link down below. It's $30 a month. It's affordable for everyone, and you guys can learn a lot from that. And remember, if you want direct mentorship and education with myself and Sniper Ads, the ultimate package is the WAP. You'll get access to the Signal Zoom as well as the course, the Discord, and the live trading with us. So make sure you go ahead, check that out, stay subscribed, and watch out for the next video.